Welcome back to Investing Talk Podcast.
Today we're looking at Ondas. And before you scroll past thinking this is just another small drone play, you really need to hear this out. This isn't just about drones anymore. We are watching a company transform into a true multi-domain autonomy leader. I mean, we're talking about massive revenue revisions and a pivot that changes the entire thesis for your portfolio.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep bringing you these deep market breakdowns.
Thanks. So here is the core tension we really need to resolve today. Ondas just planted a flag that demands serious attention. They raised their 2026 revenue target by 25%.
Wow.
Yeah, they are now guiding for $170 to $180 million.
Which is, that is a massive jump. You don't see revisions of that magnitude unless something fundamental has shifted.
Exactly. And the mission of our breakdown today is to figure out if that growth is actually sustainable. Is this a real business scaling up? Or is it just hype driven by all the geopolitical headlines we've been seeing?
Right.
Because defense stocks are hot right now, and a rising tide lifts all boats.
Yeah.
We need to find out if Ondas can actually float on its own.
Let's dive into the fundamentals, because saying you're going to make $180 million is very different from actually booking it. Where is the money coming from right now?
Well, the preliminary numbers for full year 2025 are in, and they paint a pretty clear picture. They reported revenue between $47.6 and $49.6 million.
Okay, so let's call it roughly $50 million. How does that compare to what they promised?
It exceeded prior guidance by 23%.
Okay.
But if you strictly look at Q4, the numbers are wild. Just in that quarter, they did between 27 and 29 million. That was 51% above their target.
Wait, I have to play the skeptic here. A 51% beat in Q4. That screams one-off to me. Did they just get a massive government budget flush that fluffed the numbers?
That is the right question. Usually a Q4 beat like that is a one-time event. But when you look at the 2026 outlook, management is signaling this isn't a fluke.
So it's the new baseline.
Exactly. That jump to the $170 to $180 million target that is up from a previous target of $140 million. You don't raise forward guidance by $30 or $40 million if you think Q4 was a lucky break. You only do that if the order book is completely filling up.
So what is the engine driving this? Going from $50 million to almost $180 million is aggressive. What are they actually selling?
It's the Ondas Autonomous Systems Unit, or OAS. That's the primary driver. We are talking about industrial and military-grade assets here, the Iron Drone Raider and the Optimus platforms.
And they've been on a bit of a shopping spree too, right? Rolling up other companies.
Yes. The contributions from acquiring Apero Motion and Roboteam are really kicking in. So they aren't just selling air assets anymore. They have robust military orders, border security contracts, and significantly expanding demining operations.
Demining, that seems like a very specific, almost niche application.
It is, specifically their 4M smart demining operations. It's a humanitarian application, but strictly looking at the market, it's a massive commercial opportunity given the current geopolitical climate. Business is booming in that sector. Interesting.
You mentioned Roboteam and Apero. That brings me to the system of systems concept. It sounds like pure marketing jargon to me.
It does sound like consultant speak, I know. But it is actually the most important thing to understand about their competitive moat.
How so?
Look at most competitors. They are fragmented. One company makes a great drone, another makes a ground robot, another does counter-UAS, which is shooting down drones. Ondas is building an ecosystem that combines all of it.
So they want to be the one-stop shop.
Exactly. It's a network.
Yeah.
You have AI-powered drones like Scout and Raider for eyes in the sky.
Yeah.
You have counter-UAS systems like the Centrix Iron Drone for kinetic interception, and ground robotics from Roboteam. But the real moat, the glue holding it all together, is the tech everyone overlooks because it's not sexy.
The wireless tech, the IEE 802.16T based full max private wireless.
Yeah.
What does that actually mean? Why isn't standard Wi-Fi or 5G good enough for a drone?
Think of public Wi-Fi or cellular networks like a public highway. It's crowded, and in a combat zone or critical infrastructure area, it gets jammed easily. Full max is like building a private paved tunnel that only your machines can use.
So it's harder to jam and highly secure.
Precisely. It's mission-critical IoT for rail, utilities, and defense. This proprietary standards-based ecosystem means all these machines talk to each other securely.
So if a military base installs this full max network, they can't just buy a cheaper drone from someone else because it won't connect to the secure tunnel.
Bingo. It creates massive switching costs. It's not just a drone, it's a network. And on top of that, you have the regulatory edge. Ondas is fully NDAA compliant.
The National Defense Authorization Act.
Right. It means no Chinese components, no DJI flight controllers. For global defense and infrastructure contracts right now, NDAA compliance is a mandatory advantage.
Okay, that makes sense strategically, but what about the financials? Ramping up to 180 million burns a ton of cash. What is their balance sheet approach?
They are very focused on what they call their Core Plus Strategic Growth Program. They are prioritizing capital formation specifically to fund these acquisitions and to scale.
So investors shouldn't be holding their breath for dividends.
Oh, definitely not. The focus is entirely on reinvesting free cash flow into high ROIC areas, specifically these OAS deployments. They need to feed the growth engine.
Makes sense. Let's pivot to the charts, because the price action here has been incredibly volatile recently.
Volatile is an understatement. The stock is reacting very heavily to geopolitical catalysts.
Yeah, especially the Iran conflict fears and overall defense demand. Every headline sends it moving.
We've seen a clear pattern lately. You might get these pre-market slides based on some vague news, but then you see climbing share prices throughout the day.
What do you make of those intraday climbs?
Pullbacks are largely being viewed as healthy consolidation within an uptrending channel. The market is psychologically shifting toward new highs in drone stocks, and they are buying the dip.
And it's not just retail buying the dip. I'm seeing Ondas pop up in most active stock mentions, and there is clear whale activity in the options flow.
The flow is undeniable. The blank capital momentum score for Ondas is currently at 97 out of 100.
97, that is exceptionally high.
It indicates very strong trending flow. Combine that elevated volume with the score, and it strongly suggests institutions are accumulating. They're using those defense news dips to load up on shares.
What is the street saying? Let's transition to the sentiment. Are the analysts as bullish as the options flow?
If you just read the daily headlines, it's a mix. You see bearish headlines like "Why are Ondas shares sliding in Friday pre-market?" Right next to bullish ones like "Ondas stock climbs on rising Iran conflict fears."
Just algorithmic noise.
Exactly. But if you look at actual analyst actions, the consensus is loud and clear. We are looking at a strong buy rating from 5 different analysts.
And what's the target?
The consensus price target for 2026 is $19.
$19. That implies serious upside. I haven't seen specific upgrades for 2025 yet, though.
We haven't seen the 2025 specific revisions print yet, but those preliminary revenue beats, that 51% Q4 beat, are absolutely supporting these higher 2026 targets.
It gives the analysts the cover they need to maintain that $19 target.
Yes, and it's backed by specific wins. We have the Iron Drone Raider securing a NATO order on February 13th.
A NATO order is a huge validation.
It's massive. Plus European airport deployments, the Israel demining tender, and everything they highlighted at the OAS Investor Day, showing true-scale platform momentum.
Okay, you're painting a very strong bull case here, but my job is to be the skeptic. Let's look at the downsides. What is the bear case?
What stands out to you from the numbers?
Execution risk. Without a doubt. Going from 50 million to 180 million is not just doing more of the same. It is a completely different operational scale.
It is.
And they are trying to integrate Apparomotion and Robo teams simultaneously. Can they actually manage this without an operational stumble? Integrating one company is hard enough.
That is the biggest genuine risk, integration risk. If cultures clash or the tech stacks don't mesh quickly, they could miss delivery windows.
Right. And then there's the geopolitical volatility. You mentioned the stock climbs on Iran conflict fears.
The war premium.
Exactly. The stock is essentially pricing in global instability. If tensions cool, does that premium vanish? Just look at the pre-market drop on February 20th. It shows how sensitive the valuation is to daily headlines.
That's a fair point. If the headlines get less scary, the algorithmic trading might cool off. Though I'd argue the underlying demand for infrastructure security remains.
True, but we also have to talk about financial opacity. The recent releases gave us the great revenue numbers, but specific cash and debt figures from the latest 10Q and 10K were not detailed in these recent preliminary drops.
Right. We are essentially having to trust the core plus strategy until the fully audited numbers hit.
Which makes me slightly nervous when a company is burning cash to scale.
You have to watch the balance sheet, absolutely.
Let's move to the final score. Based on all of this, the revenue hike, the NATO wins, but also the execution risks, what is your final verdict?
I am giving this a bullish score of 9 out of 10.
A 9. Very confident.
The thesis is just too strong right now. Here's the elevator pitch. Ondas is successfully transforming into a multi-domain autonomy leader.
The key drivers being those 2025 revenue beats and that massive 25% guidance hike for 2026.
Yes, and the tailwinds are locked in. You have geopolitical tension driving defense budgets, and you have this system of systems moat, protected by NDAA compliance. This ensures sustained growth.
So what is the actual strategy for the listener?
You have two options. You can swing trade this into Q1 earnings, which we expect in late April or early May, trade the momentum, or you hold multi-year. You let the defense scaling play out toward that $19 target as they hit that $180 million revenue mark.
It's a compelling setup, and here's one final thought for you to chew on before we wrap up.
Yeah.
We talked a lot about defense today, but think about the commercial side of that full-max wireless network.
The utilities and rail infrastructure.
Exactly. If they become the default private network standard for massive commercial logistics independent of any military conflict, the recurring revenue from maintaining those networks could eventually rival the drone hardware itself.
The hardware gets them in the door, the network keeps them there forever.
That's the verdict. Subscribe, like, and comment to this video to support the show. We'll see you in the next one.